Asian shares mostly were in the green at the closing bell, taking their cue from Wall Street as investors focus shifts to earnings reports from U.S. tech earnings. Tech companies boosted Hong Kong shares. However, Chinese stocks closed lower, dragged down by a decline in non-ferrous metals. Japan's Nikkei index closed up 0.3%. The Hang Seng index was up almost 2%, while the Shanghai Composite slipped 0.7%. To give us more perspective on the markets, we are joined by Han Tan, who is the Chief Market Analyst at Xfinity. Han, thank you so much for your time. How would you characterize market sentiment right now?
Yeah, I would characterize it as more of a wait-and-see mode, at least a slight one, given that we have got so many conflicting narratives around, right? As you mentioned earlier, there's perhaps some optimism for the earnings, especially for this week. But then there are also concerns, not just around geopolitical tensions, but also the risk of the Fed perhaps not pushing forward with a rate cut this year. So I think markets are looking for validation. In the meantime, it's wait and see for right now.
Speaking of those rate cuts, I mean, there are investors who are even pricing in the risk of a potential Fed increase. Are you seeing those risks at all, or the underlying risks?
Yeah, to be clear, I see the bar as being set really high for another rate hike. I think the bigger risk is there being no rate cuts for this year. I think that could be likelier, especially if we keep seeing this stubbornly elevated U.S. inflation, or at least inflation not slowing down as fast as the Fed likes, right? But to be clear, like the Fed, we also remain data dependent, so we just have to wait and see. And this Friday, we've got the Fed's preferred inflation gauge coming out.
Let's talk about U.S. earnings. I mean, your expectations, and I guess also the signal you've taken from some of the companies who've reported.
Yeah, so in terms of signals from some of the companies that have reported, right? We got Pepsi that just announced here there's a slight slowing in the U.S., but that's offset by international sales. So that can speak to the health of the global consumer or the global economy, right? Specifically for AI, there could be some concerns here, given what Taiwan Semiconductor Manufacturing announced last week, perhaps diluting some of the optimism surrounding AI. Of course, the bellwether will be NVIDIA, and their earnings aren't due to later this May. So I think in a nutshell, there is some elements of caution based on what we have seen from reported earnings so far.
Your thoughts on the overall performance of the Magnificent Seven? I mean, we saw them perform really well last year. I mean, what are you expecting this year given this AI story?
Yeah, I do expect a greater divergence within the Magnificent Seven. It might be whittled down to a Magnificent Five. So we know the problems with Tesla. That's been well documented really since last year. So I think, and at least for now, they might have to be excused from the group, so to speak. And even if you look at Apple as well, the slowdown in China and the struggles with iPhone sales, I think that is at risk of perhaps making Apple a laggard as opposed to your pure play, or at least those that are closer to the AI mania. I think having said that, Apple is trying to make inroads, and we know about the conference coming up in June. So we'll see if Apple can really jump onto the AI bandwagon earnestly and help solidify its place within the Magnificent Six or Seven.
The one, I suppose, topic to talk about has been the rally we've seen in gold in the face of a higher dollar. What do you make of that?
Yeah, so even in recent weeks, we had noted to clients that, look, this price surge in gold had really just overshot the underlying narrative, right? We know the underlying narrative. There are fears about what's happening here in the Middle East. There is a lot of central bank buying. But given the threat of the Fed perhaps keeping those interest rates at this peak for longer, gold seemed undeterred by that, which was rather surprising. So I think this pullback that we have seen, not just yesterday, but today as well, potentially dipping below 2,300, I think that's a healthy technical correction and brings it more in line with the overall narrative that's still, mind you, still supportive of gold prices overall.
In terms of events that you're watching this week, what are you keeping an eye on?
Yeah, for equities, again, it's those big tech stocks, right? So beyond Tesla today, not so much on that, but Meta for tomorrow. You got Microsoft and Alphabet later this week. So that has a large sway on equities. And then, of course, like I mentioned earlier, the Fed's PCE deflator, which is their preferred way of measuring inflation, that's due on Friday. So that could have a big impact on stocks, on currencies, and on gold as well.
Han, let's leave it there. Thank you so much for your time. That is Han Tan, who is a chief market analyst at Xfinity, giving us his perspective on the markets. And of course, as the days unfold, we are going to be breaking down some of those tech earnings and also seeing if this AI story is starting to rather match the valuations that we've seen and also the run up in share prices. And we'll also get a sense of what analysts think of some of the earnings that we've got, starting with Tesla today. So we'll keep you up to date with all of that. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.